Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Chris Dearborn, managing director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq 100 as tech stocks bore the brunt of the September sell-off. Chris, it's great to see you as always, and it seems as if the confluence of what's happening with global geopolitics, a higher interest rate environment for longer, investors questioning valuations, we saw it hit some tech stocks this month.
It really did. It was a nice big sell-off last week, which kind of was what we've been hoping for a while. That the index had a nice run up coming into the beginning of the month, bouncing off the August lows. It kind of waffled around the 15,200 mark, and then finally last week started to break a little bit. You know, that narrative of higher for longer is really kind of seeping in a little bit here, and a lot of the Fed speak around it has been, you know, are we going to be at 5.25 for 3 months, 6 months, 9 months? And when you look at the CME watch tool, if you take a look at a year out from now, it's starting to weigh in, like basically 1 year from now, from September, we'll be at 475. Probably that's where the estimates are, on probably about a 70% chance of that. But rate hikes going into the rest of the year over the next two meetings, December, really de minimis, closer to 20%, if that. And again, data dependent. You have to see what's going on. The soft landing narrative, while still, you know, the talk of the town, you know, you have strong, employment numbers. You have, a resilient consumer. GDP is going to be the question here. Higher oil is going to weigh on that. You know, and as bond prices continue to rise, you know, the 2 years firmly above 5%, and you're looking at almost 16 months of the 210 cross being in negative territory. That's got to start to fix itself. Until that does, you know, expect interest rates to stay higher, expect the market to be jittery near the highs here. Again, we're not that far off from the July highs, even though we are down and lost 3.3% last week. We're off over 3% for the quarter. The index itself is still up 35% year to date.
And Chris, if we take a look at your first chart here, what are some technical levels that you're watching in the Nasdaq 100?
Yep, the index gapped lower towards the end of last week. It crossed through the 100-day moving average. It really isn't that big of a deal, and it found support, significant support, that is, at the 76.4 Fibonacci retracement level of 14,635. That's a major level. We have to continue to hold that on a closing basis. The index is doing okay today, basically flat as we speak right now, higher than where we opened. So what we're looking for here is this level to hold and consolidate here over the next couple of weeks. If it doesn't, we're going to see a major break in the index, which will give back all the gains of the summer. Major support right now is 14,635, very tight at 14,550. Resistance overhead is very tight at 14,852, and then 15,000. Again, today the index opened at 14,662. We're at about 14,695, 700 right now. I'd like to stay above that opening price today, at least give the start of the week something to look forward to.
All right. And Chris, if we take a look at the following chart, what does it say in terms of breadth? How evenly split is it with the losers and gainers?
When I sent the original picture over, we're close to a 50-50 split, starting to weaken a little bit here into the day's end with about an hour left into the session. We're at about 60-40 right now. Again, going with where the majors are going, you're having nice days in a couple of stocks. GE Healthcare is up, Old Dominion's up well over 2%. But again, that only translates to basically 2.5 points between those two stock index within the index. When you look at the higher rated guys, you know, it comes down to where does Apple, Amazon, and Alphabet go right now. Amazon's still positive, but Apple's starting to swing to the other side. That could carry us a little bit lower into the days, and especially with the news out of the fire at one of their plants internationally over the last day.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.